Yes, Christmas is coming early. The housing market news continues to be fire. All next on Real Estate Daily. Yes, that article. What's happening with rents? That's another good thing for a lot of people. All next on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, before we jump into this, do me a favor, hit that like button. Boom. It's going to give you I'm going to give you the best 5 minutes in real estate and the mortgage market. Now, let's jump right into it. This is CNBC. I say it once, I say it all the time. If it's good news, Diana Olick, their lead real estate expert, that's what they think they call her. I don't know why they call her that. She's the one that's out in front of all the negative news because that's all she is negative Nancy. Negative Nancy. So with this being said, look at this. This is from NAR. So National Association of Realtors. This is Tracy Casper. She is the new president of NAR. They ousted the last douchebag who was hitting on the girls, and got a sexual harassment. So this is what they say. There's not enough homes to satisfy demand, says NAR's Tracy Casper. This is crazy. We've been saying this now for years. Fannie Mae saying it, Freddie Mac saying it, National Association of Realtors are saying it. There are so many people on the sideline that want homes. Now, a lot of you are saying, well, people are getting laid off. That is true. Anyone that's getting laid off and they own a home or they have a monthly payment, well, guess what? In the bear flu 2020 March and on, anytime you had problems, well, the government came in and what did they do? They went ahead and did forbearances. I think the same thing is going to happen, especially coming into election year. People losing their houses are not going to be a thing. Otherwise, it's not pro-voter. You're not going to vote for the guy who's going to kick you out of the house. Just like the whole thing with student debt. Why do you think he's wiping student debt off? It's not because, he's a nice guy or, we should be, having responsibilities as adults, whether you're a young adult or old adult. When you make a decision and you owe the money, you need to pay it, right? Isn't that what responsibility is for? It's got to be there all the rest of your life. It's a learning experience. Well, guess what? How to buy votes? I give people stimmies. This is what the government's idea is. I give stimmies, I wipe out debt, but I create more debt, hurting their chances in the future for ever getting a good job by wiping out their current debt. Never a good thing and never a good sign. And that's why, since there's not enough homes for people, they're not, instead of wiping out student debt, subsidize their houses, right? That's their future wealth, right? It's family wealth. Going forward, it is wealth. Not going to happen here when you don't have enough homes and you're not subsidizing the new builds. All right, as we talked about it yesterday, we saw that the odds of the futures of rate cuts going out was dramatically had changed from week to week to week. 1 week we had 5 cuts, next week we had 3 cuts because of the employment, which I call BS. The unemployment rate came out and it was all altered. It was all bad. Bad in a way that it wasn't true in my eyes. You had workers going back, you had striking workers going back to work. On top of that, again, the U.S. government keeps being one of the top 2 employers every single month, but I don't know where their employment's at, right? Doesn't make any sense, but they keep doing it to keep the numbers up. So let's go take a look at this. Yesterday, I said there were 5 rate cuts. Now it says markets now see a 21% chance of rate cuts beginning as soon as next month. There was less than 1% yesterday. Now it's 21%. The base case shows 69% case of rates cut beginning in March of 2024. There's even a growing 17% of 2 cuts by March of 2024. Futures are implying anywhere from 6 to 8 rate cuts in 2024. Just yesterday, the Fed said they only see 3 rate cuts in 24. What happened in the futures market? Look at this, guys. If you watch my Wednesday video and then today, look at these numbers. This is friggin' crazy. You're looking at, this was at 99, this was at less than 1%. Now you're looking at 21%. They're basically saying in March we're getting a rate cut. They're basically saying in May, we're getting a rate cut. June, we're getting a rate cut. July, we're getting a rate cut. September, all these are odds on. These are the highest odds. right? Look around. This is for 2 rate cuts by December of next year. So there's a 37% chance there's 1 rate cut and a 30% chance there's 2 rate cuts. Guys, this is nuts. These are nuts. These are crazy numbers. This happens, the housing market's going to go boom and explode. It will do very well, guys. And so, as you know, hedge funds, again, the talking heads are out there saying, well, we don't want to sell the hedge funds, we're going to ban it. There's nothing in the legislation that shows that they're wanting to do it. It's what media wants to tell you. You're going to have hedge funds come in and scoop up homes. There's no doubt about it. All right, what else is good news? Well, guys, rent prices continue to decline. Now, they're not big declines. You know, for a studio or a 2-bedroom, it's down 0.6. For a 3 or 4 bedroom, it's down 0.5%. But at least we're seeing at least something. I mean, you know, we're not just seeing the craziness of rents continue going up. I think that there's a certain point of if the population is unemployed, well, then you're going to see rates go down even further because then they're going to start living together. So kids go back from owning their, renting their own place, now going back to home from mom and dad, where they can actually stay there for free. You know, that's what we're going to see. And we're actually seeing it now. That's what this beginning of it is. I think it's going to continue through 2024. All right, guys, what you're here for is rates. Wow. Let's go take a look at rates. Okay, so this is a big drop, 8 basis points. We went from 7 beginning of the week. Now we're down at 6.898. Let's call it 6.90. 8 basis points down on conventional. That's fantastic. But look at this, 29 basis points for 15-year conforming. We should be at 5% on this. It makes no sense to ever do a 15-year if it isn't big enough. Jumbo went down 21 basis points. We still need it to fall under 7. But look at FHA, went down 5 basis points, 6.71. And we know one thing, it's momentum going down. Let's go take a look at this chart. I'll put it to the 1 month. I mean, look at this chart. It's straight down after 1 month, 3 months. We're seeing it. We have gone down further from 3 months. We're just seeing this decline. The top right here, like I said, was going to be the end of October, beginning of November, and we're going to see a decline, a slow decline. That peaked it. I mean, look at this. Wham, and we're just going down, down, down. So where are rates at today? What's the 10-year bond? Well, yesterday we were hoping it was at 3.9, under 4%, and it just was a tick and a hair above that, right? So where are we at today, guys? Boom, there is. Let's go look at it. The U.S. government bond 10-year yield 3.92. Wham, we went down 8 basis points on it. So tomorrow we should see again another drop in rates. And there's a lot of buyers now that are starting to text me, hey, what's going on, Troy? I'm watching you. I'm seeing what's going on. Craziness is happening out there. We're seeing a huge shift in the narrative that the Fed has. Now, we can go over and we can speculate why. We can speculate that the numbers really changed their mind, but the numbers really don't show it. You know, that the core CPI didn't go down, and the unemployment rate, and the amount of jobs that were created last week, according to them, went better than expected. So why did you think that they would come in and say, well, we're not lowering rates, and we're not changing rates, and then we're lowering it 3 times? Well, we think there's political aspirations here. We're thinking that they're receiving a lot of pressure from the team up in Team Washington, D.C. And because of that, every time on election year, you usually see a much better stock market, as well as, I'm going to say it, crypto market is in fuego. In fuego. Some coins have gone up 200-300%. Other coins have gone up 20-30%. A lot of them are gone up at least 50% in the last 30 to 45 days. Guys, it is going bonkers out there in the crypto land. So we're seeing that happen out there. So just give you an idea. This might be the last best year we've seen, and then we're going to pay for it in 2025. It's called the hangover in 2025. It's called the party till you puke 2024. All right, guys, you take care. I'm having some fun here. I'm looking forward to a great year, and then I'm going to hunker my ASS down. Talk to you later.